Welcome back. So today we plan to start with the audit related to banking and NBFC. Okay, I would say important topics again and bit of typical in terms of the regulatory requirements. Yeah, so that's why I think this is quite interesting also to understand, because if you get into the regularities, if you get into the regulations which are involved, then you will find this, in fact, both the topics to be quite interesting. So I'll start with the audit of banks. So now, when it comes to the audit of a bank, I think first and foremost, we need to understand is as to about the bank, what are the features or what are those special considerations which you find in case of a banking entity, unlike any other entity. Okay, why? Because as far as the audit is concerned, audit will always be similar. Okay, so the basic aspects involved in the audit, they will not change. For example, if you talk about a company and its audit, which could be, say, involved in trading activities. Similarly, if you talk about a company which, let's suppose, is involved in manufacturing activities. Okay, so in all of those cases, you will find there are similarities in terms of the audit approach which is followed by the audit. So what is it that will change when it comes to the audit of a bank? Means what is going to be different in case of this entity? Yeah, and for that to be understood, I think there again we need to get on to the first aspect of the audit, which involves understanding the entity. Yes or no? Yeah. So every time when it comes to audit, what is the first step that we do as an auditor? Every time our first step involves understanding of entity. So now, if you try to understand about the banks, okay, so there are few aspects which are very commonly observed. One, banks involve operations wherein the public interest is involved. So what is the nature of business of a bank? To accept deposits from the public. Yes or no? Now those deposits could be in the form of, for example, current accounts, savings account, fixed deposits, or there are numerous types of deposits which they have. Yes or no? Yeah. So at one place, they are accepting the deposits. And the same money which they receive, what do? They will lend it. Means they will pass it on to other parties. Yeah. Which you call as loans and advances in case of a bank. Right? Now, when they accept the deposits, there again, they will have some rate of interest. Let's suppose that is X. And when they lend the same money to other parties, so they will charge X plus 1. Right? So that's how they make money. Correct? Yes or no? Of course, other than that, they have also got various other products, which again give them a lot of money. But primarily, we can say this is the nature of the business. Correct? And in both the cases, public is involved. Right? That's why public interest is involved. Correct? And it's not about one or two persons who will be giving the deposits, taking the loans. No. There again, there are thousands, lakhs, or you can say crores of persons who are involved in this. Yeah. So that's why one of the very common feature which you find in case of bank happens to be the volume. Okay. Volume is quite exorbitant. Now, with this volume, another feature which will get attached is the IT systems. Now, in today's times, if one has to work on a volume, if you talk about any company, or even if you talk about a small company today, can a small company function in a manual environment? Answer is no. Technology is so heavy, one can say, that even if you look at the small businesses, they are also using technology to a great extent. And then we are talking about a bank wherein the volume is so high. So therein, if the IT systems are not strong, bank will not be able to function. Yes or no? Right? You go deposit money, you go withdraw money. Okay, it's actually available on a real time basis, and that's not possible when you are actually in a manual environment. Correct? Yeah. So this is another piece which is important. Now let's think about an entity which has got a huge volume involving the public. So the public interest is involved. Okay, they have systems in place in terms of manual systems, or if you say that okay, it's not about manual systems, IT systems. But definitely with such volume and with the public interest involved, risks also get attached in such a business. We can say significant risks will be involved in such a business. Yes or no? Yeah. So in such a business, you will find that. Correct. Therefore, banks need to have a very robust risk management system in place. Correct. Okay. Banks need to have risk management system in place. So that is again a very important and common feature you will find in case of a bank.
So is it, can I ask one question?
Yeah, sure.
So you said risks will be involved. Is it because since bank is dealing in public money, therefore
Right.
it is all the more responsible to take care of it, rather than then the risks get aggravated because it
So
is dealing with.
yeah, please go ahead.
That is why my question: what is the additional risks banks are having apart from the fact that the public interest is involved?
See, of course, there are a couple of reasons I would associate with this additional risk. One is a no doubt the public interest. See, wherever the public interest will get involved, the risk will get attached. But at the same time, when the volume is so high, okay, let's suppose an entity dealing with 100 persons or 100 parties as compared to an entity dealing with 1 lakh parties, automatically what will happen? The risk in case of the second entity dealing with such a large number of parties will increase. Okay, so that is why I would say this additional risk gets attached when it comes to a banking entity. Yeah. Further,
Yes, sir. Yes, sir.
all of these things you can now understand are quite interlinked. One, we say that volume is there, public is involved, which requires strong IT systems, which requires strong risk management system. And because of this, there is another very important feature which you find in case of a bank, and that is about regulations. Now, banks are very heavy on regulations. Heavy on regulations means they are subject to, again, so many regulations and stringent regulations. And why is that again so in case of a bank? Because the public interest is. Yeah. Now, all of these things are what you can say these are the striking features of a banking entity, which of course, to a certain extent, you can find in case of any other entity as well. But in case of a bank, you will always find this. Okay. Now, another important area, or you can say we can continue on the features, is the structure. Now, the way a bank is structured is again dependent on the nature and the volume which we just discussed. So, what is that? So, what will be the structure of a bank? Okay, bank will have a corporate office and will have thousands of branches, right? So B1, B2, B3, B4, B5, B6, and so on. Yeah, so there again, this is the feature which will always be attached to a bank. So you will not find a bank which, let's suppose, is having only one office. No. Yeah, why? Because the nature of its business is such that it has to be there. It will be operating in this model. Yes or no? Yeah. Now, with this feature, or you can say with this structure of the bank, one audit requirement gets into place. Now, what is that? See, for an auditor to audit hundreds or thousands of branches may be very difficult. Okay. And even if we say, no, it's not difficult, auditor can manage that, or a large audit firm can manage that. There again, as far as the risk management systems are concerned, as far as the regulatory requirements are concerned, the way the audit of a bank is required to be handled is again different from what you see in case of other companies. Now, what does it mean? So the banks will have two sets of auditors, you can see broadly. I'm just categorizing the auditors into two sets. One of the category is what you call as branch auditors. Who are the branch auditors? Who will be auditing the branches. So we are not saying that there will be one auditor who will be auditing all the branches. Generally, for 2 to 3 branches, you have one auditor, particularly when it comes to the nationalized or these PSU banks. Okay. And then you will have one auditor who will be auditing the bank as a whole, including the corporate or the head office. That is what you very commonly called as statutory central auditor, right? Central auditor means who is there at the center, at the corporate office, and who will be involved in the audit of bank as a whole. Because if let's suppose branches are audited, then somebody will have to look at the entity as a whole. Now, who is that somebody? That is the central statutory auditor. Okay. Now, once again, with the structure of the bank, with the structure of the auditors which is in place, some of the additional requirements will also fall into line that we'll discuss. Okay. Now let's quickly touch upon some of the legal requirements, okay, which are associated in case of a bank. Of course, there are a lot of regulations that the bank is subject to, but here again, if you look at some of the requirements related to financial statements, why? Because when it comes to the audit, okay, the audit and then the context of financial statements that we discussed. So now these financial statements which the bank will prepare, there again it has got a specified format. Yes or no? Yeah. In case of a bank, unlike a company, format is specified by RBI And this format is different from what you see in case of other companies. Okay, so I'm just talking about companies which are not in the nature of financial business, something that the banks or NBFCs do. Okay, so here again the format is prescribed. So we have a prescribed format in place in relation to a bank. Further, if you talk about this format, it's different. So we'll also try to understand as to how is it different and what are some of those requirements which are different from what you see in case of a company. In fact, there are some forms. Okay, and this is how you generally call the financial statements as there are some forms in respect of the financial statement, but those forms are nothing but the format, I would say, of the financial statements which are required to be considered. Okay. Now, banks, again, as we discussed, are subject to a lot of regulations. So you can say the regulator of the bank happens to be RBI. Yes or no? So RBI is the one who regulates the bank. There are different authorities as well. For example, bank being a company will also fall under Companies Act. Bank, because it's required to pay income tax, so that's why it will also have to follow Income Tax Act. Right? GST provisions will also apply to a bank. So we are not talking about some of the regulations which are commonly applicable to a company, whether those will apply to a bank or not. Of course, those will apply, but on the top of various banks, you have one regulator to whom the bank is answerable in a way. Yeah, that is what you call as RBI, Reserve Bank of India. And Reserve Bank of India has got a lot of regulations. You can say some directions, circulars, some norms, which it keep issuing every now and then. It's very, very common in case of banks, similar to what you see in case of income tax, similar to what you see in case of GST. That every now and then there is a circular issued, there's a norm which has come out, which the banks are required to follow. Okay. So this, I would say, was briefly about what you'd find different in case of a bank. Now what we'll try to do is, we'll just try to look at, just a minute. Just try to go through the financial statements.
Banking Regulation Act is also applicable, sir.
Yes, that's correct. Absolutely correct. Banking Regulation Act. So in fact, there are a lot of acts, there are a lot of regulations to which the bank is subject to. Okay, and of course, we'll just also try to understand that as to what are those acts, what is that legal framework. So let me just share the screen now. Okay, so I think over here, we can just look at as to what are those acts, what are those regulations that we have been talking about. There are so many, and this list is not, I would say, exhaustive. Okay, so you should not be thinking that this is an exhaustive. RBI Act is there, Banking Regulation Act is there, then of course for State Bank, it's State Bank of India Act, Companies Act is also there. Okay, IT Act is there. Then you have this Cooperative Societies Act. Now again, that is dependent on different kinds of structures that you have in case of a bank form. Now let's talk about the financial statements. Now, as we discussed, for the financial statements, again, a format is prescribed. Right? Now, what is that format? Let's try to understand. So what we will do is, we'll just look at one actual set of financial statements to get some more clarity as to how the financial statements really look like. Okay, so what I'll do is, I'll just quickly take you to the balance sheet and the statement of profit and loss. Now, this is what you have in terms of the format of balance sheet, or you can say the financial statements for a bank. Now, what you can say is that this is quite different from what you see in case of any other company. Yes or no? Yeah, so you have capital and liabilities to begin with. Capital, ESOPs, reserves, deposits. Okay. Then if you look at asset side, you have cash and bank balances with RBI. Okay, then you have investments, then you have advances, then you have fixed assets, various other assets. And on the face of the balance sheet itself, right, what do you find? Contingent liabilities, bills for collection, all of these things are presented on the face itself. Now, in case of a balance sheet of a bank, there are 2-3 striking features. Can you just highlight that? Anyone? Yeah, so there are 2-3 peculiarities which you find in case of this balance sheet. I'm sure
contingent liability they are showing into the face of balance sheet, whereas
okay,
in the company side we can show the disclosures.
Right. What else? What else do you have?
That PPE classification is not specifically there. They have mentioned as a fixed asset.
Okay. What else? See, all of those terminologies, etc., have not been updated. That's why you see this term fixed assets being used in case of bank. Why? Because it will be, coming from the RBI requirement. Because all of these accounting standards or any of the accounting principles which the banks have to follow, that has to come from RBI. Yes. Anything else?
Sir, and also we see the current asset, non-current asset classification is not provided.
Very good. So now in case of a bank, what do you find? You do not find any classification of current and non-current as well as financial and non-financial. Can you tell me why? Because Ind AS is not applicable on banks as yet. So that's why you do not have this segregation of financial, non-financial. Anything else that you observe in case of a bank? Because that becomes important for you as an auditor. Okay, so let me just highlight this for you. So if you look at a bank, okay, if you look at the assets, can you see the order in which the assets are given? They are presented on the balance sheet. Can you see the order?
Sir, it's given in the order of liquidity to non-liquidity.
Right. So this sort of feature you do not find in case of companies other than banks. Banks are required to present their assets in the order of liquidity. Right? Of course, the line items are different, but whatever line items they will have, that will always be in the order of liquidity. Another thing which you find in case of a bank, and which is again in line with the nature of business that they have, are 2 items. So if you look at this entire balance sheet, there are 2 items which are very heavy in case of this bank and which you'll always find in case of every bank. What is that?
Sir, deposit and advances.
Yes.
Advances.
Yes. So advances is one. Okay. The most important area for a bank, therefore, will be what? Advances. So when it comes to the audit of a bank, advances is going to be the most significant area. Can you just check as to what percentage is advances of the total assets? Yeah. Can you just check that? What percentage is this as compared to the total assets? It's the major percentage. If you compare this to all other assets, you will find this to be the item with majority amount or majority balance. Yes or no? You can also try to compute this. And similarly, if you look at the liabilities side, okay, there again, the deposits which the bank accept, that's the major item which you see on the liability side. Yeah. So that's why as an auditor, if you were to audit the bank, what would you focus on? Of course, there are 2 areas you are going to always focus on: deposits and advances. And of course, more on the advances side because it's something which is asset. Okay, so that's where you have additional risks as far as the recoverability is concerned. And there again, there are a lot of prudential norms, there are a lot of regulations which RBI has issued, which the banks are required to take care, and therefore auditor is also required to take care of them. Yes or no? Yeah. Okay, so then I can see Saminathan has computed this. He is saying it's approximately 63%. Yes, and you can just understand this significantly high. Even if you look at the companies, you do not find any one particular which will be holding the majority part. And this feature you'll always find. So it's not about a particular year. So if you look at the comparative year, you'll see this. Any year you pick up, you'll always see this because that's the nature of the business of the bank. Okay. Now, similarly, if we move on to the P&L, now here again, you will find the format of P&L to be slightly different. Now, this is very, very important. Why? Because with these two items, balance sheet and P&L, we are also, as an auditor, trying to understand as to what do we need to focus upon. Okay. So now, in case of a P&L, unlike a company which is other than bank will not have any revenue, sale of goods or services. They can have that, but that's not the nature of business. Okay? So what is the nature of income? Interest income. Right? What is the nature of expense? Interest expense on the deposits. Okay. But because the banks are subject to various regulations, so that's why other than this total income, other than this total expenses, which will give you the profit during the year, there are various reserves which the banks are mandatorily required to create. Okay, you can see that on the face of the P&L itself. What are those? Statutory reserves, capital reserve, investment fluctuation reserve. Okay, there are some special reserves. All of these are what? All of these are the statutory requirements which the banks are required to follow. Okay, clear? Everyone clear so far?
Yes, sir. Clear, sir.
Okay, great. Now,
Yes, sir.
let me just go back. Okay, now what we will try to do is we'll just try to come back to our focus areas, because what is our objective? Our objective as an auditor is to understand the bank. Okay, so far we are just trying to looking at as to what is it that we have as an auditor that we need to focus upon. So now, when it comes to the audit of any entity, okay, so let's suppose there's any entity. What is the meaning of audit? Audit means you go and check what the entity was required to do. In very simple terms, we can say that. Now, for an entity, what are the things which is required to be done as far as its financial statements are concerned? One can say accounting principles. Okay, or you can say the accounting standards. So an entity is required to follow the accounting principles which are applicable. Okay, so that's one. Second will be the laws and regulations. So I'm not talking about only a bank, I'm talking about any entity. So if let's suppose as an auditor, you go audit any entity, what will you see? Of course, you will check the accounting requirements, which is nothing but AS. Then you will check applicable laws and regulations on the entity. And the third part, you will apply your auditing standards. Okay, so the various auditing standards that you will have, you will apply. Yes or no? Now, as far as accounting principles are concerned, auditing standards are concerned, they are quite common. when it comes to any entity? Yes or no? So now for a bank, can we say that we have another set of auditing standards? Answer is no. For a bank, can we say accounting principles are different? Yes, to a certain extent, but not completely. But what is going to be different every time when it comes to different types of entities? That will be the applicable laws and regulations. Okay. So that's why this is one area which one needs to always get into. Why? Because there's not something which is commonly seen. Yeah. Which can be quite uncommon in case of some of the entities. For example, a bank. Right? So therefore, as an auditor, once again, what is going to be our focus area when it comes to the audit of financial statements of a bank? Applicable laws and regulations. And this is something which we also understood, that these are quite stringent. And these are again too many. Okay. But as an auditor, will it work if we ignore this? No. So as an auditor, therefore, it becomes important to understand the applicable laws and regulations. Because if the auditor will not understand that, if the auditor will not have the knowledge of the required regulations in respect of that particular entity, auditor may miss out on a lot of areas to be audited. Or even if the areas are audited, auditor may miss out on some of the important things in respect of those areas. For example, advances. Right? So let's take an example of advances. Now, if you were the auditor of the bank, advances is one area you will always pick up, and you will call this as significant risk. Tell me. Yeah. So when you will do your risk assessment as an auditor, will you consider advances as a significant risk or not? Tell me, what are your thoughts?
Yes, sir. Significant risk is there.
Always. Correct? Why? Because this is so important area in the financial statements. Now, let's suppose you understand, you are very strong on accounting requirements, and you have also gone through all the auditing standards. Okay, you have covered that completely. And now you start the audit of a bank. You have not really looked at the rules, any law, any particular regulation which is applicable on a bank. Now, in this case, when you will audit the advances, so what can you check? You can check as to whether these are recorded in an appropriate manner or not. You can check the underlying documents which are involved in respect of advances. But when it comes to the advances, there are so many norms which are issued. Norms are what? Again, the regulations. Now, as an auditor, if you miss out on that, then what will happen? Will you be in a situation, or will you have the comfort to say that by ignoring, I'm saying ignoring because you didn't know about it, will you be able to say that you had the comfort that the accounting of the advances is correct? Tell me. Will you have that comfort level? Answer is no, because you never know what are the regulations which may have required some sort of provisioning in respect of those advances. As an auditor, you did your best. Okay. Management was also doing its best. But if you do not understand anything, will you be able to ensure that is done? Answer is no. So that's why, as an auditor, what is the most important part? To understand what is required to be done. And that's why, please remember, when it comes to any type of entity, So basically this entire audit, you can just easily break into three parts. One is accounting, second is the laws and regulations, and third is the auditing standards. Okay. And as an auditor, it is again very, very important to have the expert knowledge of all of these areas. Correct? Why do we say expert knowledge? Because if you do not have the knowledge, how will you question the management? How will you question the client? Okay, because you are going to check something. If you do not understand that, if you do not know that better than the client, how will you say that something that the client has done is not correct and something which you are advising or which you are saying is correct? Yes or no? Yeah. So that's why one peculiar feature which gets attached to the audit of the banks, and you'll also find in case of NBFCs, is what? These laws and regulations. Okay, so that's why in this particular area, when it comes to the audit of banks, what do we need to focus more on? Regulations. Understood? Yeah. So today, when we'll also be looking at some of the questions, you will find, okay, at a lot of places, various regulations have been considered. And some of the audit considerations are based on those regulatory requirements. So if you do not understand those regulatory requirements, that is where you miss out as an auditor. Why? Because you don't understand what is required to be done. Clear? Now, quickly, what we will do is, we'll just try to go through some of those regulatory requirements. Okay. We'll just try to also understand as to what is required to be done in case of those regulatory requirements. Quickly, we'll just flip through that. Idea is again not to deep dive into that. I'm sure you are quite familiar with that, but we'll just sort of flip through that so that you can also get an insight as to what is more important, what is not so important. Yeah, though for an auditor, as we discussed, everything is important, but as far as this theory is concerned. Okay, but before we get on to that regulation, let us just quickly understand the audit process for a bank. Okay, now, as far as the audit process of a bank is concerned, once again, what I'll do is I'll just break this entire audit process into 4 activities. Or you can say 4 sort of sub-processes. First is planning. Second will be the execution. Okay. Third will be the conclusions. And fifth, of course, will be the reporting. So you can say there are 4 sort of stages. These may appear to be, sort of sequential, but not always. It's more of an activity which goes through and which involves all of these stages and all of these processes or all of these sub-processes taking place in a simultaneous manner. So when it comes to the planning, what do you have? Can somebody explain that when it comes to the planning of an entity, forget about bank for the time being. Okay, forget about bank completely. Just think about the planning. So when it comes to the planning of an audit, what are going to be the considerations? Can somebody explain? What all considerations will you have when it comes to the planning of an audit?
We have to understand the business environment in which how working nature of business.
Okay.
And the internal control, how it is functioning.
Right. What else?
And under which framework it is working. What is the laws and regulations relating to it.
Right. And the understanding of laws and regulations again.
Yes. And then the ethical requirement of the entity.
Right.
And the independence, how they are working, all these things. Significant matters involved in the auditing.
right? Significant matters involved in auditing means what? Let's suppose you are auditing you are going to audit the financial statements for 24-25. So what do you mean by significant areas? Are you talking about 24-25?
Yeah, yeah. You see, significant matters means if the existing auditor is resigned, we need to check
Right.
what is the reason behind of the matters. We need to check it out.
Okay,
Like that.
right. Anything else?
Findings pointed out by the auditor, flagged by the previous auditor.
Okay,
It's,
very good. What else?
and in case of a bank, if it is foraying into what we'll see, what area of financing advancing it is there, like if it is in a village rural credit cards area, so different sort of norms would be required. If it is into industrial financing and credit, what all checks are there would be there. I mean, we'll make a planning for that.
Right,
That
right. What else? What else do you have? Okay, so now yes, please go ahead.
Terms of audit engagements,
Right.
communication with the previous auditor,
Mhm. That's correct. What else?
identifying and assessing the risk of material misstatements,
Okay,
materiality,
materiality, very good. Yeah, so these are all activities which are associated with the planning, I think, which you just mentioned. So, of course, we'll have engagement formalities. So, I'm not really getting onto the engagement formalities. Planning is all about how the audit is required to be done. Okay, so you'll, of course, understand the way we just discussed. I think we have already spent a lot of time on the understanding piece. Then, once the understanding is obtained, what do you do? That is when you get into the risk assessment as an auditor. So you'll identify what are going to be the significant risk areas. For example, you will say advances is going to be one significant areas. On the advances, then again you will categorize different kinds of advances you may have. Then you will get into the norms of the provisioning which are attached to that. So that's how you will segregate your areas. You will have engagement team meetings where you will do the work allocation. You will also decide as to who is going to do what, right? Materiality again is important. Why? Because that is one thing which will become basis for your audit. If let's suppose you are a continuing auditor, so you'll be knowing that what have been the issues in the previous years. If you are a new auditor, you'll have to think through. Okay, you'll do some industry sort of analysis. Okay, you may have some discussions with the other colleagues who will give you some insights as to what are going to be the focus areas as far as risks attached to the banks are concerned. Correct. So now, typically, isn't this the same thing that you do in case of any other entity? Answer is yes. That's one and the same thing. Yes or no? Now, similarly, if you move on to the second stage, okay, when you get into the execution, now what do you mean by execution? When you get onto the field work. So what do you do? There again, when it comes to the field work. So in case of field work, you will be involved in the testing procedures. To begin with, what do? You will get into the control testing. You will look at the controls, whether the controls are operating in an effective manner or not. Yeah, is that important for a bank? Tell me.
very important.
Very important. Why? Because when it comes to the statutory audit, now please understand, this is the most important area as far as banks are concerned. Because we discussed the volume for a bank is so high, is so big, that for a statutory auditor to audit each and every transaction is not possible. Even if a large sample is selected, again, there's a risk about the untouched areas, or you can say those samples which have not been tested. So, how will the auditor get the comfort through the controls? Anyways, the banks are required to have strong controls in place. The risk management system, there again, RBI has norms for the risk management strategies for the banks. So, all of these things, whether those are in place or not, has to be looked at by the auditor. And that is where the controls become a very important, you can say, the focus area for the auditor, similar to what you see in case of advances. This is a focus area. And if you look at the audit report for the banks, okay, we'll also just try to flip through the audit report. As far as financial statements are concerned, it's quite similar. But for a bank, there is another form of audit report which is issued, that is what you call as LFAR. Can you tell me the full form of LFAR?
Long form audit report.
Long form audit report. Now, what is this long form audit report? It's nothing but a checklist.
It will contain a lot of questionnaires in it.
Correct. It's kind of a checklist. Okay. Now, in case of this checklist, there are a lot of questions which are asked, you can say, which the auditor is required to answer. Yeah. And this covers a lot of areas which are in relation to some of these norms, regulations, as well as some of the controls which are in place. Okay. Now, of course, on the basis of this field work and a lot of procedures which the auditor will perform, what do? You will get on to the conclusions. And of course, on the basis of conclusions, auditors will get on to the reporting. Now, report, as we discussed, one of course is the main audit report, which you find in case of any other company also. And the other piece is about the this LFAR and various other reports which are required to be issued by the auditor. So we'll just also try to go through an audit report. But before that, I think we can just flip through some of the requirements related to audit of banks. So just give me a minute. Okay, so now, as far as audit is concerned, I think this is one area we just discussed. Yeah, so this is something which is going to be similar to a bank. As far as its comparison with any other entity is concerned. Okay, then I think if you move on to some of the specific areas, okay, which are going to be important as far as banks are concerned. Let's talk about this internal audit. Now, one point which is associated with the controls, or one of the ways through which any banking entity would want to have the risk management system in place is going to be what? Internal audit. Okay, so that's why internal audit is again going to be a focus area. In fact, if you look at banks, banks are subject to different types of audits. Okay, banks will have internal audit. Then there's also a concept of concurrent audit. Internal audit, concurrent audit, they are all about policies and procedures to be checked. Okay, they are all about systems which the banks will have, processes which they have, whether they are operating in the manner which is required by the policies and procedures as well as the regulatory norms. Okay, so that's why this internal audit or some of these other audit requirements, they are quite important for the banks, right? Now, moving further, if you focus more on the compliance part. Now, as we discussed in case of P&L, banks are required to again follow various reserves. Okay, they need to create those reserves in the financial statements. At the same time, there are also some norms of RBI. Okay, in respect of some of the ratios which they need to maintain. So I'm not talking about the ratios which will be presented on the P&L only, or the reserves which you see, which you just saw presented on the P&L. It's also about ratios which are required to be maintained. Now, all of these are required to ensure that the banks have got enough liquidity, they have got enough balances in place, right? So again, it's a kind of check that the RBI places on the banks, right? Now, moving further, so CRR, SLR, again, these you can say are a part of those regulatory norms which are applicable to the banks. Okay, then I think what we can do is we can also talk about some of the other important areas which you find in case of bank. Okay, and therein I would like to focus more on this advances piece. Now, advances. Now, this is one area which is very, very important for a bank, right? We understood as to why this is important. Now, when it comes to the advances, now, can you just think about some of the audit procedures that you would like to apply on? Tell me. Of course, one procedure will be about the control testing. Okay, controls, whether those are in place or not. What are the other audit procedures which you can think of when it comes to
Loan,
advances?
we'll verify the loan documents,
Okay, so what are the loan documents you will verify?
loan
If you can just
agreements,
take an example and discuss.
guarantee agreements,
Okay,
Collateral securities.
then mortgage properties, if there are mortgage properties.
right.
Then we'll
Okay,
verify the title deeds, whether they are originals or not,
okay,
whether entire chain of documents in relation to the title deeds are there,
right,
and whether the narration, the recital in the of the mortgage is properly entered in the register.
right. What else? What
And
else do you have?
then the documents which we have taken for those the affidavits and the signatures required for the continuance of the account.
Okay, what else? So this is all about the documentation. Anything else that you would like to look into, that you would like to focus
Cre-
upon?
Credit worthiness of the client,
Okay,
whether
how do
he
you
was
assess that?
we assess that by if it is a firm or a company, we assess it by the balance sheet. And
Okay, anything else on this?
checking the EMI statements.
Right. So you are talking about the recovery, huh? So you are saying whether the money is being repaid by the parties, is it?
Yes, sir.
Yes or no?
Yes, sir.
Okay, so that is about, I think, underlying documents, and that is more about the recoverability. That is also about checking the procedure or the process of the bank, whether the bank has followed the right process which has been put in place for giving that advance to the relevant party.
no diversion of the funds, like the fund was used for that particular in that particular area for which it had been sanctioned. And
So how do you check that? I think this is an important point you just mentioned. How do you check that? First of all, if you can just explain what is the meaning of diversion of fund. So are you
like
talking
for
about diversion of fund by the bank? Is it?
no sir, by the
Okay.
by the person who has taken the loan.
Okay, very good. So how do you check that?
Like for example, a builder is there,
Right,
and he's into several projects.
right,
He has taken a loan for a particular project.
correct,
We'll see that whether the loan which is being disbursed to him, whether
right.
he's being that is being used in that particular project, or is he driving it to buy some other properties and some other areas. So
Okay,
otherwise this project will never be completed in time. And the
right, correct. So now how do you get to know about it? That whether he has been utilizing it for the right purpose or not as an auditor.
So we'll see how much construction has he done in case of a builder. We'll see how
Right,
much construction has he done and whether the disbursement is linked with the construction performed by him.
right. But how do you get access to this information? So will you go check that physically? Is it? So just think about a bank. Huh? So let's try to understand this perspective. Let's suppose
There are
bank has given
there are
thousands of
value
advances.
there are values of banks, architects. Their
Okay,
reports are also there. The banks obtain those reports from the architects and valuers before disbursing the second installment, third installment, fourth, every
right,
stage. And
right.
that is documented.
Very good. So I think this is again one important area which the banks and the auditors are required to look into. And when, of course, all of these advances are given, so there are some underlying conditions That will again vary on the type of advance which is given. But depending on the type of conditions that you have, you need to ensure, okay, whether all of those requirements have been followed by the respective party or not. And how do you get to know about it? Again, you will not be getting into each and every detail by getting into discussions with those parties or getting into those physical verifications until unless the amount involved is too high, wherein you may decide to do that. Why? Because maybe the bank has given some corporate advances, which is quite significant, maybe for one corporate. Okay? But of course, for the others, there are a lot of reports which the entities are required to provide to the banks. So it's a very, very common process for the banks requiring the customers. So these are all customers, for the customers to submit their reports, okay, to certify from their auditors as to whether the money is being utilized in an appropriate manner or not. So some of these reports are submitted on a quarterly basis, in some of the cases on a half-yearly basis, in some of the cases on an annual basis, and in some of the cases on a monthly basis also. For example, if you talk about drawing power, yeah, so this drawing power limit which is there, so that is again dependent on the drawing power, which can keep changing, okay, period on period. So that's why entities are required. I'm talking about the customers. The customers are required to submit their inventory statements, their receivable statements to the banks on a monthly basis, okay, which again is the internal process of the bank. Banks internally need to assess as to whether this is in line with the required procedures or not. As an auditor, when you go and check, you need to find out whether the bank has done this or not. Yes or no? There again, you will be doing this on a sample basis. Banks will also be picking up on a sample basis, but they need to have a process in place through which this is being done. Okay. Then another very important area which is attached to the advances happens to be around the provisioning norms. Yes or no? Yeah. For a bank, all of these advances, once again, you can have, say, being categorized into two categories. One which you can say is the performing advances. Performing means ones which are good, and second is non-performing advances. Means somewhere there is a problem, and that's why you call it as non-performing advances. Okay. Now there again, some of the regulatory norms, what do they require? The moment the advance is NPA, okay, so what do? You stop recognizing interest income on that on an accrual basis. Correct? And in all of these advances, whether these are good or not so good or bad, some provision is required to be created by the banks. Yeah. So all of these classifications into performing, non-performing, provisioning, where the provisioning is appropriate or not. Okay. Then there again, the accounting challenges which get attached to that. All of these things are required to be looked at by the auditor. And this happens to be, I would say, again, a very important area. Why? Because this can have some P&L impact. Okay. And that is where you find a lot of challenges. Okay. And that is where I think you need to have some of the regulatory requirements, understanding of some of those regulatory requirements also. Yeah. Whether the advances are backed by government guarantee, whether the advances are backed by state government guarantee. Okay. Central government may have given, state government may have given. All of these norms, okay, which you can see are important for the auditor to look into. And when can the auditor understand that? Only when the auditor will have the knowledge about it. Yes or no? Yeah. So tell me one thing, that considering this requirement, okay, will this now not be important on you because you also happen to be the auditor? Yes or no? Yeah. So as an auditor, therefore, this will also be important for you to look into. Again, it may be difficult for you to mug up each and every regulation. Yeah, but at least you should flip through all of those regulatory requirements so that you can have some fair idea as to what the banks are required to do as far as all of these provisioning requirements are concerned. Clear?
RBI would have issued circulars for and the banks would have followed most of them. So,
No, not most of them. Bank
or
is
I mean,
required to
all of them.
all of them. Yeah.
So that is the area of checking,
Yes. In fact, there is a process. So what RBI does is every year RBI, of course, as we discussed, these changes keep happening. Similar to what you have in income tax or GST, every now and then there will be a circular. Every now and then they will come up with some change. But every year they come up with a master circular. Okay, that is again dependent on the type of entities that they have. And this is not again limited to the banks. This is again something that you see in case of NBFCs. Now those master circulars, I think, give you a complete insight as to a lot of points which are applicable to the banks as well as the non-banking companies. As an auditor, it is important to stay updated on all of those regulatory requirements, on all of those circulars, whether those are the master circulars or the regular circulars which are coming. Okay, important point is that for you also, it becomes important to have an understanding of these norms. At least you should be flipping through this. Okay, so that should be your part of revision. Okay. Yeah, everyone clear on this?
Yes, sir.
Any questions, any doubts so far?
Clear, sir.
Okay, great.
last line. What did you say? It is a part of our revision.
No, I'm saying as an auditor, of course, some of the practical aspects we discussed, but as an auditor, okay, because you are an auditor in a way, okay, so as part of your revision, as part of your preparation, you should be also flipping through some of these regulatory requirements.
Correct. Correct.
Yeah, because that is what is expected out of you, and that's how I think you will get more clarity in terms of how the audit is required to be done. Further, through the questions that we'll discuss today, you'll also understand that some of those regulatory requirements are being tested on your part. Okay, so if you don't have the complete clarity, you may not be able to answer some of those questions. Okay, so that becomes important, right? So now let me just quickly get on to one more part, and that is about the audit report. Okay, just give me a minute. Now, as far as audit report is concerned, so audit report again will be quite similar to what you see in case of any other entity. Now, in respect of audit report, one is the opinion. Okay, opinion on the financial statements. So that is very much similar to what you see in case of any company, which you call as main audit report also. Okay, for which you go to essay 700, 705, 706. Okay, a lot of these essays that you look at. So that's a common one. Other than that, there are some more reporting requirements which are placed by RBI on the auditor. Yeah. So one of them happens to be the LFAR. As we discussed, it's more of a checklist which is put in place. Okay. Then there could be various other reports which the auditors are required to sort of provide. LFAR, report on compliance with statutory liquidity ratio requirements, report on whether the treasury operations of the bank have been conducted in accordance with instructions issued by RBI. Okay. Then, of course, report on whether the income recognition, asset classification, provisioning, all of these, whether these are in line with what RBI requires or not. Okay. So these are again some of the common things that you find in place, right? Now, in relation to this audit report, what we can do is we can just quickly flip through this audit report also. Okay, so once again, I'll just go back to this bank and their audit report. So in this case, what you have, okay, so if you look at this audit report, it's quite similar. Okay, so this is a bank, right? So this audit report, what do you find? It's quite similar. So you have this opinion. Okay, to begin with, then the basis of opinion, then CAM, of course, is there. Now, the nature of the CAM is going to be different, considering the nature of the entity that you have. Then of course, then you talk about the other information, okay, on which the auditor will comment upon. Responsibilities, of course, auditors' responsibilities, of course. Then the report on other legal and regulatory. Now here again, you'll have to get on the legal and regulatory requirements which are applicable to a bank, not only the company. Of course, the one which is applicable to the company you'll look at, but other than that, bank also. Right? Clear? Then of course, IFC. Okay, IFC is again one of the areas which is very, very important. Okay, so there again, what do you find? You have this similar sort of report on IFC. Okay, so this is no different from what you see in case of any other entity. Okay. So now what we will do is, now we will pick up some questions. So through those questions, we'll just try to maybe revise a bit more on the banking piece. So just give me a minute. All right, so let's look at this one. Okay. CA Harshit is conducting statutory audit of branch of a public sector bank. On examining 20 large advances of the branch, he finds that in 5 examined cases, loan applications have been filled up incompletely, means those were not complete, with important details left out. Okay, so this is one of the observations. So I think out of 20, in 5 cases, he found this problem. In these cases, it is also noticed that the cash credit limits to the borrowers were enhanced during the year, but there were no records pertaining to the assessment of enhanced working capital requirements in respective borrower files. Okay, so this is another observation. So first one, loan applications are incompletely filled up. Okay, then you find cash credit limits were enhanced. Okay, branch is unable to show such assessment or workings. I think this is the problem. Okay, because if anything is in place, branch should be able to provide the relevant documentation around that. However, all the 5 accounts are operating satisfactorily. I think this is a good point. As far as accounts are concerned, there has been no problem. Okay. These accounts have been classified as standard assets. I'm just hoping standard assets, you know, standard means good, means the performing one. Okay, there's no problem as far as these assets are concerned. Problem in the sense around the recoverability. Okay, in terms of interest, in terms of principal, they are good. Would the above information prompt the auditor to suggest change in asset classification of above accounts? What does the depicted situation reflect? Over to you. So in this case, as an auditor, how do you handle this? Over to you.
Sir, when we are checking the internal control evaluation of the advance given,
right,
it has to be followed the internal control procedure,
right,
loans and loan policy and procedure, and also the credit appraisal to be done. And
right,
regarding the documentation, it should be properly maintained, and security creation for the additional enhancement of the loan also to be done.
Right.
They actually, all these cases, they failed to perform all this situation. Hence, there is a chance for getting this standard to non-standard asset.
Right.
So definitely that the auditor has to consider for classifying the standard to non-standard asset as per my understanding is concerned.
Okay, so as an auditor, you have this concern, huh?
Further, sir?
Sir, even though the classification is up to, if the default is continuing more than 90 days as per the norms.
Right.
But in this case, the significant risk is involved.
Right.
Since we do not have the sufficient, currently they are maintaining well. In future, if suddenly they are withdrawing everything, not paying, the risk is more.
Right.
So,
okay, so as an auditor, you have a problem with this, huh?
Yes, sir.
In terms of classification requirements, is it?
Yes, sir.
Okay, so that's one. Anyone else?
Sir, there is not a problem in it. We have to inform the management, means higher authorities about this, and collect all the documents, because standard assets are in, and they are paying the loan payment means punctually.
Right. Okay, so you're saying as far as the classification is concerned, there's no problem. We are good to go. Okay, so the classification should not be impacted. Okay, so the bank can continue to keep it the way they have done. But of course, this needs to be escalated. Huh? So something needs to be done around it as a process. Is it?
Yes, sir.
Okay.
Sir,
anyone else? Yes.
Sir, in continuation, my above point actually already discussed, where the documentation, say example, to determine the credit limit, the drawing power of the entity, if the documentation, the stock statement is given not given more than 3 months, in those cases also it will consider as a NPA.
Correct.
Here the document weakness is there.
Right. So that's why you have a concern, is it?
All this is a concern for me is credit appraisal is not done properly, documentation is not done, the security creation also, the collateral security, whether they collected or not, and all these things is a matter of concern for me.
Okay.
And it also reflects on the branch working, because 25% of the this represents about 25%.
Right.
And this can always reflect on the branch getting involved with these 5 parties, 5 advances, because the norms were not fulfilled in those specific 5 areas.
Right. So I think you have a perspective around the fraud, is it? That maybe there's a collusion in play, huh?
Yes,
sir. Again, a good observation as an auditor, because very well it might be there. So of course you will have a concern as an auditor that this sort of situation should not be there. Correct?
No,
anyone
sir,
else?
Because why were these 5 accounts singled out for not fulfilling the norms, and the rest were in the rest areas were taken? It is not that they were ignorant or as a policy they were not following. It means they are specifically did not follow for these 5 areas.
I completely agree. So that could be a concern on the part of the auditor, which is good. Yes.
And the sanction authority also is questionable on this case, sir. How they sanctioned the amount?
All right, great. Yes.
We have to discuss the matters with the management initially.
Right.
Then here it is saying that some records have been missing, so we have to collect and just show it as. Otherwise, there is no risk here, I think.
Okay. So you're saying this needs to be discussed, and as an auditor, you'll just always want to understand the perspective of the management as to what is there behind these 5 accounts. If you get a satisfactory response, you're good to go. Is it?
Yes.
Of course. That's correct. Okay.
No, sir, it would be a violation of the RBI policies also. No, so how can the management satisfy us on those areas where the norms have not been followed?
Correct. So of course that can also be one of the arguments, right? So let's try to understand. Okay. In this case, an account becomes NPA when it ceases to generate income for the bank, right? In the given situation, if you look at all the accounts, they are operating satisfactorily. So there's no reason for suggesting changes in their classification. Okay, so now there are couple of problems here which the question has asked. First, will this documentation problem lead to the asset classification change? So the answer is, if you go by the regulatory requirements, that change in classification doesn't get triggered. Why? Because this has been going good. But at the same time, there is a very big problem which is attached to the documentation. What is that? This matter of incompletely filling up loan applications. Further, lack for record of assessment of enhanced working capital shows that internal controls over advances in the branch are not proper. So what does it reflect? It shows the deficiencies in the credit appraisal process at the branch level. Right? Right? So of course, as an auditor, you will go discuss this with the management, of course, the top management as well. Right? But when it comes to the top management, so top management of the branch, and of course, the auditor may always want to highlight this to the head office. But as far as the reporting requirement is concerned, there again it's a big deficiency which has to form part of this LFAR. Right? That's why you have this LFAR in place. Okay, so this matter cannot be ignored. But as far as classification is concerned, classification is not getting triggered. Okay. Next question. In course of audit of Good Samaritan Bank as at 31st March 24, you observed the following. First, in a particular account, there was no recovery in the past 18 months. Bank has not applied the NPA norms as well as income recognition norms to this particular account. When queried, the bank management replied that this account was guaranteed by the central government and hence these norms were not applicable. So you have got an answer now, right? Unlike the one which you had in question number 1. Bank has not invoked the guarantee. So there is a guarantee provided by central government, but the bank has not invoked the guarantee. Okay, so in this case, what do you do? Number 1. Would your answer be different if the advance is guaranteed by the state government? Over to you. Tell me. So in this case, there are two questions. How will you deal with this? Number 1. And if let's suppose you change this to state government instead of central government, how will your response change as an auditor? Yes, over to you. Now, as we were discussing, okay, so this is one area. Now, in this question, what do you find? There are some regulatory requirements which have got attached. Yes or no? So, if you are required to answer this question, till the time you do not have the understanding of this regulatory requirement, okay, which is attached to the government guarantee provided by the central government, provided by the state government, you will not be able to answer this. Yes or no? Yeah?
Yes, sir.
Right? So that's where, we were discussing that if you flip through some of these regulatory requirements, which are given in force in the study material, then I think you will be able to easily attempt some of these questions as well. Okay, so now let's try to understand as to how will you deal with this.
Sir, with respect to on the first case, A part,
Yes.
the central government guarantee is given.
Right.
The thing is, even though it's past due over 18 months,
right,
it need not be classified as NPA on this point. However, okay, we need to stop the interest recognition from
okay,
the date it's exceeding over 90 days.
Right.
On this first case, when the central government given the guarantee on it.
Right.
Where in case of the state government,
yes,
the guarantee situation is different.
Okay.
As soon as that guarantee that the period is exceeding over 90 days, the asset to be classified as the NPA on this state government case.
Okay. Okay. Very good.
This is what.
Very good. Anyone else would like to add to this? All right. So let's look at the solution. So if a government guaranteed advance becomes NPA, then for the purposes of income recognition, interest on such advance should not be taken to income unless it is realized. So that's what you do in case of any NPA. However, for the asset classification, credit facility which is backed by central government, okay, though overdue can be treated as NPA only when the central government repudiates its guarantee. When invoked. In this case, bank has not invoked the guarantee. So the question of repudiation doesn't arise. Hence, the bank is correct to the extent of not applying the NPA norms for provisioning purposes. Yeah. But when it comes to income recognition, so this exemption is not available. Hence, income to the extent which is not recovered and which has been recognized by this bank should be reversed. Now, when it comes to the state government, so this situation is going to be different if this is guaranteed by the state government. So this will be different because this exception is not applicable for state government guaranteed advances where the advance is to be considered as NPA if it remains overdue for more than 90 days. Right? Further, in case the bank has not invoked the central government guarantee, though the amount is overdue for long, the reasoning for the same should be taken because that is, of course, a problem. And it should also be reported in LFAR. Right? Clear? Okay, next question. In the same bank's advance portfolio comprised of significant loans against life insurance policies. So that's the portfolio. Huh? You are required to provide the audit procedures. So how will you audit such portfolio? So what are going to be your audit procedures? Can you tell me? For this advance portfolio, okay, wherein the life insurance policies have been kept. So what are going to be your audit procedures? How will you audit those advances? Over to you. Yes, tell me, how will you audit? What are going to be your audit procedures on that? Tell me quickly. What all audit procedures you will consider? Tell me.
Check the policies, documentations.
Okay, so of course you will check the underlying policies. So you'll verify that okay, whether the policies are there or not. Very good. So that's one. What else?
And whether these there is an investment element in these policies.
Okay, what do you mean by investment element?
You know, some policies have a money back guarantee and.
Okay, right. What else?
So that would be an area of security for the bank.
Okay, very good. What else? What else? Anything else? So two procedures we have discussed. Anything else? So when it comes to advance, of course, a lot of things are required to be checked. So what is it that you will check? Yes.
So as far as the LIC policy, in the policy against loan,
right,
we need to check the sanction process, how it was sanctioned.
Whether so it's loan against policy.
Yeah, loan against significant loan against a life insurance policy.
Right.
In the audit program, what are the things we need to verify it? First, we need to check the sanction process, how the sanction limit is given, because the surrender value also we need to check it. See, suppose the policy is taken for 1 crore. If you are giving 1 crore loan, means it's not worthy. We need to check how much premium is paid, out of which what is the percentage of the loan to be given.
Very good.
And also we need to check it. Is there any assignment of the policy? If the policy is assigned to someone else, If you are
Yes.
giving the loan for that, then there is no work for it.
Correct.
And particularly, we need to verify the KYC, whether the KYC in all respect is obtained by the bank or not. And also, we need to check the interest application, how the interest is applied, calculated. All these things we need to consider while doing the audit program for the loan against LIC policy, I believe.
Correct. So, as you rightly mentioned, this life insurance policy is what? This is nothing but a kind of security. Okay? So, therefore, as an auditor, what do we need to check? Of course, the process, policies, procedures, but at the same time, whether this security is adequate or not. Okay, whether the security is in place or not. So that's why what are going to be your audit procedures? Inspect the policies, see whether they are assigned to the bank, but that's how the bank will get covered. Whether such assignment has been registered. Examine whether premium has been paid. What if the policies are not in force? The policy is given, but the premium is not getting paid. So is that worth it? No. Certificate regarding surrender value, that needs to be examined. Okay. Also, if such surrender value is subject to payment of certain premium, then the amount of such premium has been deducted from the surrender value. Okay. Next. ABC Bank had sanctioned credit limits of 100 lakhs to Volcart Limited on 1st September 2021. Renewal of limits was due on 1st September 23. I think after 2 years. While doing the statutory branch audit for the year ended 31st March 24, you find that renewal has not been done even though 180 days are over. Bank says that renewal process has been initiated on time and most of the documents are received. Now this is important. Huh? This renewal process has been initiated on time. Most of the documents are received. Now this is a problem of most, not all. Account is operated regularly. So now this is again good and is in order. Balance is maintained within the drawing part. So this is also a good thing. It also shows a letter from Volcart stating that due to sudden death of their auditor means auditor of Volcart, a new auditor had to be appointed by Volcart. Procedure for appointment took some time and the new auditor of Volcart was auditing was doing the audit all over again. Of course, when a new auditor will come, he'll just sort of, restart the things. So the limit was not renewed till 31st March 24. So that's the problem. I think that is where the problem has taken place. But there's an explanation for this. However, the audited financial statements are received on 10th of April. And the renewal letter was issued immediately. Your assistant is insisting, means you are the audit team. So your assistant is insisting that the account must be classified as NPA since the limit was not renewed on 31st March. What is your opinion? Yes, over to you. So as an auditor, what do you do? How do you handle this? Over to you. What do you do?
Sir, as far the renewal is concerned,
right?
See, norms is very clear. If it is beyond 180 days, in this case, is clearly given.
Right.
See, if the renewal is not done, we have to consider it as a NPA.
Okay.
Even though the most relevant document is received for the renewal, the renewal process is not at all completed.
Right.
Then it will not be treated as a standard asset. In this case, it is what my opinion is concerned. Even though the auditor is death, all these things, stories, blah blah, everything is be there. In this case, it's very strictly, it's not renewed within 180 days.
Right.
That is what my
So you
my
agree with
conclusion
the
is.
assistant, huh? So you are saying you'll go with what assistant requires.
Yeah. It is a NPA only.
Okay, very good. Anyone else having different thoughts? So let's look at the course of action. If you look at the guidelines of RBI, account should be classified as NPA if the renewal is not done in 180 days. Okay. However, in the present case, operations in the account are excellent, means going good. Bank has shown a letter from the company as well that due to some unavoidable reasons. Of course, these are unavoidable reasons. Audited financial statements got delayed, right? So there's an evidence to this, and this is something which is beyond the control of Volcard. Further, if you look at the limit, that also got renewed before signing the audit report. Yes or no? Thus, even if the sanction was issued after the balance sheet date, it relates to the position as on the balance sheet date. Yeah, so something which you call as adjusting E, right? Okay, as per the requirements of accounting standards. It's also a matter of substance over form. Now, that is what you need to consider. Why? Because one aspect which you need to consider is the reasons which are unavoidable. Therefore, the auditor would consider the account to be a standard asset instead of classifying this as an NPA. Clear on this? Yeah.
Yes, sir. Sir, I forgot about the say we are following the rule-based accounting, not the principle-based accounting.
No, which is correct. But when it comes to the audit position, okay, so
Yeah,
idea is now when you go look at the management, okay, so who is responsible for accounting? Management. Management has not done that. Now, as an auditor, what do? You will look at the substance over form because you are, of course, you can say as an auditor, I am also bound by the rules. But is there any provision in the accounting standards which requires those rules to be looked at in a manner which is different from drawing a line on 31st March? Answer is yes. And we have this accounting standard of this events occurring after the balance sheet date, which requires this adjustment to be done in the reporting year itself. Thereby, you get into this assessment. Okay. Right?
sir, we discussed sometime about that the accounting standard is not applicable for banking sector. Then why we are considering this accounting standard
No.
here?
So see, it's not about accounting standards are not applicable on the banking sector. That's not true. See, accounting standards are applicable on the banking sector, but those are the ones which are prescribed by RBI. So RBI has specified as to what will be applicable, what will not be applicable. So you can't say that it's completely a different set of accounting principles which are followed by the bank. No. So the format is completely different. That's true. Okay. But as far as accounting standards are concerned, so some of the accounting standards they have tweaked RBI. For example, if you talk about these NPAs, so income you don't recognize on that. So accounting standard will say follow accrual. You keep recognizing it, but RBI says no. You will be conservative on that. Okay, so there's a tweaking which is there. You can't say it's completely off. Understood?
Okay, sir. Got it. Thank you.
Yeah. All right. So now I think what we can do is we can take a quick short break and then we'll continue with this. Yeah.
Okay, sir.
All right. So I think 10 minutes, 5 minutes. Tell me this should be good enough.
Sir,
Right.
we can go for 10 minutes, sir.
Okay, great. 10 minutes done. Ashok, let's take a break. Huh? Yeah. Let's move on to the next one. I think some more questions we'll discuss. Next one. You are auditing a small bank branch with a staff strength of the manager, cashier, and 3 other staff, S1, S2, and S3. Okay, so there are 3 staff members. Among the allocation of work for other areas, S1, who is a peon, also opens all the mails, forwards it to the concerned person. Okay, so that's how the roles and responsibilities are divided. He does not have a signature book so as to check the signatures on important communications. S2 has possession of all the bank forms, checkbooks, demand draft, pay order books, traveler's check, foreign currency cards. Okay. He maintains a record meticulously, which is good, which you have also test checked. However, no one among the staff regularly checks that. Yes, S2 has been doing that on his own. You are informed that being a small branch with shortage of manpower, it is not possible to always check the work and the records. So as an auditor, what do you do? What are your thoughts on this? So in this case, what do you do?
Sir, bank will have the internal check system always.
Right.
The thing is that the maker checker concept should be implemented.
Right.
And that is what that they have the internal control audit team.
Right.
And also they will appoint the concurrent auditors to check whether the internal check is performed, how the performance is doing.
Right.
There is a weakness. I feel there is a weakness in the internal check on this matter.
Right.
For this.
Okay. But what do you do then?
Yeah, we have to recommend the internal control weakness in the LFAR forms as a deficiency identified on these matters.
But you need to be a bit practical also, don't you think so? Because branch is too small, they have got only 3 persons. So how do they manage this?
See, bank is small or all these things also. The matter it's involvement in public interest. The money is involved publicly. So the thing is that the small or big is not matter. The money is even single rupees is matter. So the maker check, the internal check should be there in the place.
Right.
That is what my opinion is.
Okay, sure. Anyone else? Your thoughts on this? Over to you. Anyone else?
So there doesn't seem to be any significant lapse.
Okay. So you are good with this?
Considering the significance and the staff and all those things.
Okay, great. So now in this case, the banks are required to maintain a system of internal controls. Why? For mitigating risks, maintain good governance, to meet the regulatory requirements on the top of it. Okay. That doesn't seem to be in place in this branch. Yes or no? In fact, there are some internal controls which they have violated. First, S1, who is a PN, opens all the mail, forwards it to the concerned person. He doesn't have a signature book, so as to check whether the signatures are in accordance with the implementation, maintenance of general internal control. All the mail should be opened by a responsible officer. Signatures on all the letters, advices received from other branches of the bank or its correspondent should be checked by an officer with signature book. So this is first violation. Second, all the bank forms. In fact, this is considered to be a kind of inventory in a bank. Okay, so if you look at our bank, checkbooks, all of these are what? They should be kept in the possession of an officer. And another officer should verify the issuance and stock of such inventory. In fact, this is what the banks do. Okay, so they maintain inventory of this. This is required to be physically verified by the banks. In the given case, only a single person has the possession of all the bank forms. Even though he records this, he is maintaining that properly. Yeah, that doesn't help. Further, contention of the bank that it's a small branch with shortage of manpower, because of which they are not able to check the work and the records, is not tenable. Why? Because such lapses in the internal control pose the risk of fraud. Okay, and as you rightly mentioned, so there's a public interest involved. So what do they do? What do you do as an auditor? Report it. Okay, yeah. Next, NRF Bank Limited is suffering from huge number of NPAs. During the month of April, management of the bank decided to sell some of its NPAs. Bank is doing this exercise for the first time. Management has selected following NPA accounts for sale. Okay, so there are 5 accounts they have selected, which they plan to sell. Okay. They are NPA since which date is also given, their total amount is also given. Being the internal auditor of the bank, you are required to scrutinize the proposal made by the branch and help them by providing specific points to be considered. So tell me, what is the consideration which you will suggest, which you will look into as far as the sale of NPA is concerned? I think here again, what do you find? Bit of regulatory requirement involved in this. So if you have the clarity of that regulatory requirement, you will be able to answer this. Correct? Yeah. Over to you.
We'll check the selection process first, how these particular accounts were selected.
Okay, very good. So that's
out of
not many, which they will be having.
And then the identify the process by which the proposals were invited and selected.
Okay, very good. So just to ensure that things are in line with the policies and procedures of the bank. Okay, generally these will be the procedures of the bank. Okay,
like there should be a public offer and all those things, so that we get the best offer.
Correct. So it's all about obtaining the quotation, sort of. Yeah.
Yes.
Okay, good. What else? Anything else which you will consider? Anyone else? All right, so let's look into this. See, in case of sale of NPA by the bank, auditor needs to examine the following. Policy laid down, of course, this is important, in relation to procedures, valuation, delegation of parts, including NPAs that may be sold, norms on or such sale valuation procedure. Only such NPA has been sold. Now, this is the regulatory requirement, I think, which is not generic. Only such NPA has been sold which has remained NPA in the books of the bank for at least 2 years. Now, in this case, what do you find in the question? Data is given. Okay, generally when the data is given, so you'll be required to apply that data somewhere. Okay, some of the procedures, when you talk about looking at the policies, procedures, okay, looking at the quotations and all of these things, there you don't require the data. For the examiner to include the data in the question, there must be some thought process. Yes or no? Yeah. So where do you apply that? You will apply on this particular requirement. Okay. Assets have been sold without recourse only. Means the entire credit risk associated with the NPA should be transferred to the other bank. Okay, subsequent to the sale, bank should not assume Any sort of legal, operational, or any type of risk means should be completely gone. NPA should be sold on cash basis only. Yeah, further, there should not be any contingent price. Contingent price means something which is dependent on in future on the outcome of some event. And the entire sale consideration has to be received upfront, which is cash basis only. Bank has not purchased an NPA which it had originally sold. On the sale of NPA, same has been removed from the books of the bank. If the sale is at price below net book value, what is book value? Net book value? Book value less the provisions. Shortfall should be taken to P&L. If the sale is for a value higher than net book value, excess provision should not be reversed, but will be utilized to meet the shortfall or loss on account of sale of other NPAs. In the given situation, following NPAs are being planned for sale. Correct? And when is the sale expected? This is the plan, April 24. In view of the above mentioned conditions, what do you have? All the NPAs can be sold except for this one. Okay, except for this one. Why? Because this criteria of having the NPA in the books for at least 2 years is not fulfilled for this party. Otherwise, for the remaining parties, it's good to. Clear on this? Everyone clear?
Yes, sir. Only 1 year only completed on the diary.
Sorry?
Only 1 year completed on the diary works.
Yes, yes, correct. It should have been at least 2 years. So that's why this needs to be excluded. The remaining are good too. Of course, subject to other conditions, but that is where you can say the data is being used. Yeah. Next. PDSJ and Associates are the statutory auditors of a scheduled commercial bank for the year 23-24. While evaluating the internal control over advances, it came to their notice that classification of term loan borrower accounts into SMA as well as NPA is done in the system on the following lines. So what is the process which the bank has followed? In case full dues are not received on a particular due date, a borrower account is immediately considered as overdue on the very next day. For example, if the due date of loan is 31st March 23 and the dues are not received on 31st March 23, it shall be considered as overdue on 1st April. Okay, so very next day they are doing this. Good. If it continues to remain overdue, then the account is tagged as SMA on 1st May. Again, the required time frame that you have starting from 1st April. If it continues to remain overdue further, then the account is tagged as SMA2, okay, on 31st May. If it continues to remain overdue even after being tagged as SMA2, it is classified as NPA on 30th June. Evaluate the above control designed by the bank in the system for the purpose of exercising control over such advances. Tell me, what do you think about this tagging, about this kind of classification which the bank is considering? Do you agree with this or not? What is your thought? Here again, what do you find? That regulatory requirement that you need to consider. Okay, only then you will be able to answer. Over to you. Any thoughts if you have on this?
Currently, we have 90 days norms on this NPA classification.
Right.
But in this case, only 2 months. So after 2 months, no, it's classifying as NPA.
No, it's not after 2 months. Why are you saying 2 months? It's
okay,
been
it's classified as NPA. Okay, it's on 30th June only. Okay, fine.
30th June. It's not 2 months.
But the system is automatically calculating the NPA norms, sir. In
Right.
this case, we need to be very careful we need to verify the IT system,
Right.
whether the loan due is
Right.
immediately captured or not. We need to do the test check on that internal control.
No, so that is what you have
internal test.
already done. Now, please understand, in the given question, auditor has already done that. Okay. And this is one of the instances.
Okay.
Okay. So you should not be looking at the audit procedures right now. I think that audit procedure is already performed. And this is the outcome. Now you
Sir,
need to comment that
yeah, please come
whether
down.
this.
Yeah, please come down. What is the question? Actual question. I need to check it out.
Okay. So the question is that this sort of, situation which the auditor has come across, wherein this is how the asset has moved from SMA1 to SMA2 to S2 to NPA. Do you find this process of the bank okay, or is there any problem in this? That's the question. Yes, quickly, over to you. Anyone else? So let's look at this. Yeah. Okay. So now, see, the design of above control instituted by the bank and its system is not in accordance with regulatory guidelines. And let's understand why. Any amount due to the bank under any credit facility is overdue if it is not paid on the due date which is fixed by the bank. Therefore, the borrower accounts are flagged as overdue by the banks as part of their day-end processes for the due date. Now, this is important. Now, classification of borrower accounts as SMA, NPA is done as part of day-end process for the relevant date.
What is meant by these two lines?
So, right. So I'll explain this. Now, what is the meaning of this? Okay, in other words, date of SMA or NPA reflects the asset classification status of an account at the day end, not the next day. In the given situation, what has happened? Due date of loan account was 31st March, and the full dues are not received by the bank before it runs the day end process for this date. Date of overdue, therefore, should have been 31st March and not 1st April. Okay. Accordingly, now what will happen? If it continues to remain overdue, then this account shall get tagged as SMA upon running day-end process on 30th April. 30th April. Okay, not 1st May. Accordingly, date of SMA classification for that account shall be 30th April. Similarly, if the account continues to remain overdue, it shall get tagged as SMA upon running the day-end process on 30th May. Further, if it continues to remain overdue, it shall get classified as NPA upon the running day-end process on 29th June. So what has been the problem? Problem is this very next day. Okay, so this is the problem area. So it appears to be very good to us that very next day they are doing this. Yeah. So maybe in the question, when you see this in the exam, okay, you may get confused. You may understand that this process is very good, but actually it's not true. Why? Because this has to be done on the same day. Very next day is a kind of, you can say, not in line with what the RBI or the regulation requires. Clear?
Clear, sir. In this case, 1 day is a matter for this.
Yes, of course. Right. And 1 day matters for you because your entire solution can go wrong, isn't it?
Yes.
Of course, for the bank, for you as well. Okay. So
yeah, 1 day.
I think that is all the more important for you. Forget the bank. Bank can manage somehow.
Answer is
Yes, sir.
changing.
Right.
Yes, sir.
For
Yes,
you,
sir.
the entire answer will change. Isn't it?
So kindly point out what all regulatory requirements we need to study. I mean, focus on for the
Yeah,
purpose.
so I think the regulatory requirements which you have in the study material, okay, so that is what I think you need to go through. And I would say particularly around the advances. Advance is the most important area when it comes to a bank as well as NBFC. Okay, and the same thing you'll see we'll discuss in case of NBFCs also. So anything that you have in your study material, which is around advances, which is around advances, whether it comes to a bank or NBFC, I think you should make sure that you flip through that. Okay, and that is not too much. Yeah, at least a good reading wherein you can just understand that point, that should be good enough. Okay, I'm saying as a bare minimum. Of course, then various other regulations, if you just flip through that, that's good for you. Right?
Yes.
All right. So now, next question. You have been appointed as concurrent auditor of a branch of Silver Bank, which primarily deals in foreign exchange transactions. That's the nature of the business of this particular branch. During the audit, you noticed discrepancies in certain inward and outward remittances, as well as unusual fluctuations in the nostro account balances. What audit procedures would you implement to verify the accuracy and compliance of foreign exchange transactions? So it's all about procedures you need to follow for a branch which is into foreign exchange transactions. So I would say this is quite generic in nature. Okay, so if you look at this, okay, so there are two categories of questions. So if you look at this category, okay, it is very specific to a provision. So if you don't understand the provision, you can't answer the question. If you look at this question, this is very generic, right? This is very generic. By generic, I mean to say you need to just give the pointers, that as an auditor, how do you audit this type of branch or this type of transactions? Okay, over to you. Tell me, what are going to be your audit procedures on this? Tell me quickly.
Sir, the exchange rate, what they used for the particular transaction, we need to verify it first.
Okay.
And with respect to import and export,
right,
that yeah, we need to verify the accounting accuracy also, verify whether it is correctly used, the buying currency and selling currency on the state.
right,
And I need to check the limit also. Sometimes limit the liberalization scheme are there for
right,
that LRS scheme is there. No, but per individual there will be a
yes,
2.5 for 5 lakhs US
right,
dollar per annum.
okay,
And then I need to do since it's pertaining to nostro related transaction. The nostro accounts means we open the account at the foreign countries,
right,
foreign countries, so that we need to have the cash position and that exposure position to do the reconciliation out of it.
correct.
The reconciliation is mandatory. What is the position of the nostro account, and also what is the cash position to be verified. This is what, and also we need to check the tax implication. Is there any tax that double avoidance tax, all these things, transaction is there involved? We need to examine that as well. That's what I believe, sir.
Right. So if you look at some of the procedures in continuation to, I think, which you just mentioned, you can always check the foreign bills negotiated under the LCs. Okay, check FCNR or other non-resident accounts. Okay, whether the debits or credits are permissible under the rules. Check whether the remittances inward outward have been properly accounted for. Examine the extension cancellation of forward contracts for purchase sale of foreign currency, whether they are duly authorized or not, necessary charges have been recovered. Balances in nostro accounts in different foreign currencies, are they within the limits? overbought, oversold position maintained in different currencies, that should be reasonable, again within the limits. Adherence to guidelines issued by RBI, HO, about dealing room operations. Okay, verification, reconciliation, I think you already mentioned. So I would say in such type of questions, you can be a bit generic and that should be good. Okay. So now what I'll do is I'll just in a way continue with our discussion. Okay. And now I'll just move on to this NBFC. So why do I say continue? Because when it comes to an NBFC, so there are a lot of requirements that we are going to discuss, which are quite similar to what you do in case of a bank also. Okay, so now, in case of an NBFC, just a minute, let me just share the document. Here again, similar to a bank, NBFC has got similar sort of business. Yeah, similar sort of business is there. Again, it comes with certain restrictions, but very much it's similar on the lines of the bank. So that's why here again, what will you have? You will have 3 requirements when it comes to the audit. One, you will get onto the accounting. Second, here again, laws and regulations. And third will again be the audit, which is nothing but the auditing standards. Correct. Now, in case of NBFCs, you have Ind AS for some of the NBFCs applying to them. So that's why your format of the financial statements for NBFC is different from what you see in case of bank. But does it really matter to us? No, because we'll just go look at the areas on the basis of our assessment, whatever be the format of the financial statements is there. But of course, as an auditor, we also need to check whether the format is in line with what the norms require or the regulations require. Okay, so that's why I would say once again, an area which becomes important for you and which is quite peculiar happens to be what? Laws and regulations. Here again, NBFCs are subject to various laws and regulations. Here again, the regulator happens to be RBI. Right? So similar sort of requirements you will have as far as audit is concerned related to NBFC. Okay. Then, for the NBFCs, there are some registration requirements. There are some norms in relation to their business. Let's try to understand some of them. Okay, as to what is the relevance of that. So, in case an entity gets into any sort of business which is in the nature of NBFC, so it will require a registration as NBFC. Okay. Now, in order to identify a particular company as NBFC, what do? It will consider both assets and income pattern. Okay. Now, what does it mean? It is also called as very commonly 50-50 test. So, when the financial assets of a company constitute more than 50% of total assets, as reduced by intangible assets, and the income from such financial assets constitute more than 50% of the gross income. Okay, when you have both these criteria fulfilled, please remember both the criteria fulfilled. That is what you call as NBFC business, or such an entity will be considered to be doing the business of NBFC, and therefore it will require a registration certificate from RBI. Now, what are those registrations and what are those regulations? So let's understand. No NBFC is allowed to commence, carry on business without obtaining certificate of registration issued by RBI. and having net owned fund of 25 lakh or such amount, not exceeding 100 crore rupees, provided bank may notify different amount of net owned funds. Okay, so now RBI has notified amount of net owned fund for different categories of NBFCs, including rupees 2 crore for certain categories of NBFCs. So there again for different types, there are different categories. Now there are different types which are possible for the NBFCs. Okay. Core investment company, if you look at NBFC, which is in the nature of this asset finance, which is in the nature of this mortgage guarantee. Okay, all of these are what you can say. All of these are categories or the examples of NBFCs. Now there are certain companies which are exempted from registration under RBI. Now what are those? So again, we have this list available. You can just flip through this list as to what list is this. Okay. Housing finance institutions, merchant banking companies, stock exchanges, nidhi companies, insurance companies, right? Now, further, if you look at one more regulatory requirement, okay, so it talks about scale-based regulation. So you can say a regulatory framework for NBFC is in place, okay, for their classification and for the regulation to apply on them in terms of capital requirements, in terms of standards of governance, in terms of prudential regulations. And for that, you can say 4 categories have been created, and these are called as 4 layers. Yeah, these layers are based on their size, activity, perceived riskiness. Yeah, so these are the layers. So first is called as base layer, then you have this middle layer, then you have the upper layer, and then you have the top layer. So I would suggest just flip through this once. Okay, so you never know, you may have questions based on this, right? So just flip through this. So some of these regulations, they appear to be quite, typical, but at the same time, you can see that the questions are picking up some of these regulations. Yeah, so it's important that you go through that. Now, if you look at the banks or the NBFCs, so if you quickly compare the difference, NBFCs cannot accept demand deposits. However, some NBFCs can accept term deposits, unlike what you see in case of banks. NBFCs do not form part of payment settlement mechanism, cannot issue checks drawn on itself, unlike what you see in case of banks. Okay, then you have this DICGC, which is about providing an insurance to the depositors of banks, which you do not have in case of NBFCs. No minimum exposure to priority sector is required by the NBFCs. Okay, then as around the capital requirements, capital means the capital which the NBFCs are required to maintain. So these capitals are again, there are layers of capital, tier 1, tier 2. Tier 1 you can say is the core capital. Okay, means which is very important requirement for the NBFCs to have in place. So there are again norms attached to it. So there again, I would advise that this is one area which you should at least flip through. So what is this tier 1 capital? Okay, what is this tier 2 capital? What does it comprise of? So various components that you have. Okay, so when you talk about tier 1, so it is the sum of owned funds. Okay, it is also called as clear capital, as reduced by investment in shares of other NBFCs and in shares, debentures, bonds, outstanding loans, advances, and perpetual debt instruments issued by non-deposit taking NBFCs in each year to the extent it does not exceed 15% of the aggregate tier 1 capital of such company. Now, when it comes to tier 2 capital, tier 2 is also the capital, but you can say it's slightly diluted. So what does it include? It includes preference shares other than those which are compulsorily convertible into equity, revaluation reserves at a discount of 55%. Then you have general provisions. Okay. Then you have hybrid debt capital instrument subordinate. So all of these get included in the tier 1 capital. Right? So that's why we say it's slightly diluted in nature. Right? Again, as around this tier 1, tier 2, there is a detailed guideline which is in place, but at least this much part you should go through, okay, as part of your revision at the time of examination. Now, income recognition, again, I would say income recognition, asset classification, similar to what you saw in case of banks. Here again, it is important. Okay, so now, for an NPA, in case of NBFC, you recognize income on cash basis, not on accrual basis. Any income which has been already recognized on accrual basis, the moment the advance becomes NPA, that income you will have to reverse if that is not yet received. Okay. So one point is that you do not recognize on a go-forward basis. The other point is anything which is recognized, even the recognized part, you will have to reverse if that is not yet received. Okay. So in this case, now what do you have? Here again, you have 4 categories. Standard. Standard means a good one. Means where the money is collectible. So there's no problem as far as collection is concerned. Substandard means when the asset has slightly deteriorated. Again, there are some norms attached to it. We can just flip through that. But some deterioration has happened in case of substandard. Third, doubtful. Doubtful is the one when a significant deterioration has taken place. Means now the collection is all the more doubtful. There again, you have categories on the basis of aging. Okay, 0 to 1, 1 to 3. So these agings are available. Then the 4th category, loss asset, means when you have completely lost them. Means chances are completely gone that the money will be recovered as far as NBFC is concerned. Okay, so that's how you look into it, right? Now, in relation to all of these categories that you have, a detailed explanation is available for each category. So what is a standard asset? Okay, up to what point of time you keep the asset as standard? When does the standard asset move from standard to substandard? When does this substandard asset move from substandard to doubtful? When does it move from doubtful to loss category? This will also vary depending on the type of NBFCs that you have. So there could be deposit taking NBFCs, non-deposit taking NBFCs, systemically important NBFCs, non-systemically important NBFCs. All of these are categorization by RBI. Okay, so you don't need to get into those categorization of NBFCs, but depending on the type of NBFC that you have, because the question may specify that this is the category of NBFC and this is the detail of their advances. Now, what should be the amount of provision? Okay, so some sort of calculation may be involved on your part. So that is what is expected out of you. So at least that much part you should be aware of. And I would say if you can prepare a summary of some of these provisions, that will help you quite a lot, right? Okay, so now if you look at the provisioning requirements, so let me just get on to the provisioning requirement, because that's an important part to it. Okay, so it says loss asset, if you have, you create 100% provision, right? Then doubtful that you have, again, depending on the aging, you'll have 20% provision or 30% provision or 50% provision. Standard asset, sorry, substandard asset that you have, you create 10% provision. Even for the standard asset, okay, which is considered good as far as the recoverability is concerned, there again, RBI requires a provision to be created. And what's the thought process? Thought process is very simple. See, RBI is a bit stringent and it requires entities, NBFCs or banks to be conservative. in terms of booking the income, in terms of recognizing the losses, because it's a kind of loss. If you do not recover the money, it's a kind of loss, isn't it? So that's why, what do you have? Even for the standard assets, you find there is a provision in place. Again, depending on the category of NBFC that you have. It's a very nominal percentage, but for the bank, which has got a huge volume of advances sitting in this category, sitting under standard asset category, this amount can be quite significant. Okay. Then moving further, then I think as an auditor, you will be looking at various audit procedures. Okay. And I think what we can do is maybe we can just flip through one audit checklist. So if let's suppose you were to audit any NBFC, so what do you audit and how do you go about the audit? So there again, when it comes to the audit of an NBFC, I would once again say that your audit procedures are going to be around the similar sort of criteria. So just give me a minute. Now, here again, if let's suppose you are picking up any NBFC, so as we discussed, as an auditor, what do? You will be auditing the financial statements, right? So now, all of those procedures will also be required to be applied. So you'll plan. As part of your planning procedures, what do? You will get into the risk assessment, most important part. And here again, when you do the risk assessment, what do? To identify the areas that you need to focus on. Means, what are going to be the significant risk areas? What are going to be the significant risk areas? So can you tell me which areas you will always be considering as significant risk areas for any NBFC? Tell me, can you think of some of the significant risk areas?
Advances.
Yes, very good. Here again, what will you have? Advances. See, advance is a by default item. Right? Two reasons for this. One, the amount involved. Second, the regulatory norms which are attached to this. Okay, so that's why it's going to be a focus area. Second will of course be the regulatory requirements. Regulatory requirements. Now you may be thinking, but advances we have already covered. See, other than advances, there could be various other regulatory requirements which are applicable to such type of entity.
Relating to their licensing norms, every year renewals or verifications, maintaining the asset structure and income structures, those have to be, whether they are being followed, and it continues to remain an NBFC.
It continues to remain an NBFC and it is also following all the norms which are required in relation to an NBFC. So as we discussed, what do you have? You have a master circular of RBI in relation to various compliances which the NBFCs need to do. Okay. So if you look at that circular is running into, I think, some 50, 60 or maybe 100 odd pages. Yeah. So that needs to be applied by the entity. Okay. So it talks about each and every aspect. It talks about the policies and procedures which they need to set up. It talks about the income criteria. It talks about the provisioning criteria. It talks about a lot of things which they need to put in place. So as an auditor, if you are not really looking into it, so how do you get the comfort as far as the truth and fairness of financial statements are concerned? Is that possible? No, because some of the very important areas may get missed out. Yeah, so that's why it needs to be focused upon. Anything else that comes to your mind?
So the NFC classification we need to consider. That is a major criteria on this.
Which classification you mentioned?
See, NBFC classification, sir, whether it is base level, high level, mid level, all these things, sir, I am
Correct.
talking
So you
about.
are talking about the layers. Number one.
Layers is very, yeah, layers
So
important.
Right.
We need
So
to
I
check
agree with
the.
you. Right.
And where it is the investment is done on this part, then the borrowing, how the borrowing is done. See, since the tier 1 and tier 2 capital structure is very important on this matter.
Correct.
And,
so that is also about assessment of this capital as to whether that is. In fact, there are a lot of ratios here again, similar to what you saw in case of banks. For example, SLR. Okay, various other reserves these NBFCs are also required to maintain. Some of the ratios they are required to maintain. So all of these things, where do they come from? They come from the master circular. Okay, or you can say these directions. So these are also called as directions of the RBI. So in a very generic term, we are using this term regulatory requirements, which includes everything.
Yeah. If you look at the balance sheet perspective, how the investment done, how the borrowing is done, how the equity structure is derived since the tier 1, tier 2 to be followed, and how the liability provisions is created from the balance sheet perspective. From on the we can drive a lot of input from there.
Yeah, that's correct. That's correct. Yes. What else?
The security creation and the recovery mechanism, like SurfaceE provisions and notices for default, timely issues.
Correct. So that is also a good part to be looked into. What else?
Sir, net on funds.
Net on funds, of course, that is also about the registration requirements and the maintenance of that. So one, of course, is, let's suppose at the time of registration you are meeting this criteria, but you need to continue with that criteria. Yes or no?
Sir.
Yeah.
Yes, sir.
So all of these things are important on the part of the auditor to look into and to ensure that these things are in place.
Yeah, we need
because
to
otherwise
see.
there are a lot of areas we'll see in the financial statement. So I'm not really touching upon each and every aspect in the financial statement because that's quite generic. Of course, you can think about it, but there are very, very specific provisions related to NBFC. That is what we are focusing right now. Yes.
We need to check any related party transaction there, because when it's NPC, then it will have the impact. Then we need to do at the end of the year, if sudden increase in loan, see, is there any window dressing to suit that financial ratios?
Right. So you can say,
I think these are the
any sort of situation which is resulting into a fraud, that again needs to be looked at. And of course, this is one of the risk areas, okay, fraud risk area, which the auditor needs to focus upon. And there again, if you talk about both the NBFCs and the banks, yeah, so it's a significant risk area.
Yes, sir. And particularly, the NBFC is also allowed to get the deposit from the public for the certain NBFC.
Correct.
So we need to be more vigilance on that part.
Right. Correct. So in case of those restricted activities which are permitted, yeah, whether that is in compliance with the regulatory requirements or not, that's again correct. Yeah. Then in case of NBFCs, we have got CARO as well. Yes or no? So as an auditor, we need to look into some of those requirements of CARO. Yeah. So let us just quickly flip through some of those requirements of CARO. So I'll just get on that part. Auditor is required to report around CARO. Whether during the year company has made investments in, provided guarantee, security, granted loans or advances in the nature of loans secured to companies, firms, LLP. If so, whether the investment made, guarantee provided, security given are not prejudicial to company's interest. Okay, so that's one. Where the repayments or receipts are regular in terms of loans. If the amount is overdue, state the total amount overdue for more than 90 days and whether the reasonable steps have been taken for their recovery. Okay, where the company has granted loans or advances in the nature of loan, okay, specify the aggregate amount, percentage thereof to total grants, yeah, amounts which are granted to the promoters, related parties. Where the company is required to be registered in line with what we just discussed, whether the registration has been obtained or not, where the company has conducted any non-banking financial or housing finance activities without a certificate of registration. Okay, again, depending on the types of categories, where the company is a core investment company. So there again, you need to find out what is a core investment company and where the company is exempted or unregistered core investment company. Where the group has more than one core investment company as a part of the, so you need to give the number of the core investment company. Okay. Then of course, as we discussed as regards the accounting requirements, so Ind AS apply, but again, there is a criteria for the applicability of Ind AS, which is based on the listing and the net worth. Okay, and that's why the format of the financial statements, okay, the one which you have for NBFCs is different as compared to what you see in case of banks. So you have this current and non-current segregation, number one, and then you have this financial and non-financial segregation. Correct? Now, in terms of this segregation criteria and in terms of this format that you have, now there are some differences in between NBFCs and the other companies. So that means if you look at Schedule 3, Division 2, that is applicable to companies other than NBFCs. And if you look at Schedule 3, Division 3, which is applicable to NBFCs. So there are some differences. I would advise you should also go through these differences. Because this will give you a clarity as to what the NBFCs have been doing in their financial statements. And how is that different? One, they have been allowed to present the items in the balance sheet in order of their liquidity. Remember the same thing we saw in case of banks?
Yes, sir. ICICI Bank financials.
Right? Okay. NBFC is required to separately disclose by way of note any item of other income or other expenditure which exceeds 1% of total income. Whereas for other companies, you have this criteria of 1% of revenue or 10 lakh, whichever is higher. Okay. For NBFCs, you are required to separately disclose under receivables if they are induced from LLP, in which director is a partner or member. NBFCs are also required to disclose items comprising revenue from operations, other comprehensive income on the face of statement of profit and loss, instead of showing that only as part of loss. Separate disclosure of trade receivables, which have significant increase in credit risk and credit impaired. In fact, this is what the companies also do generally. Conditions or restrictions for distribution attached to statutory reserves, which the NBFC would have created during. Okay, yeah. Now what we will do is, now we will pick up some questions on NBFCs. Okay, so I would say again, it's sort of continuity, very much on similar lines what we discussed for banks. Okay, this is what we can discuss. Just a minute, I'll share the screen. CAM is appointed as the statutory auditor of FinCorp Limited for the financial year 23-24. Company is an NBFC covered under NBFC, systemically important non-deposit taking company. Now, that is where you need to go through the regulations. Remember, this is what we discussed. To comply with the RBI prudential norms for asset classification, FinCorp has made the following provisioning in respect of loans, advances, other credit facilities as on 31st March. Now, once again, in the question, some data is available. See, wherever the data is available, I think it will require you to make use of such data. So definitely this will not be a generic question now, right? So we have got 4 categories. Standard, substandard, doubtful 1 to 3 years, balance, and the provision. So provision amount is already computed for you. Good. In the question, it's already computed for you. CAM is of the opinion that company has not done the provisioning correctly. What do you think about it? In this context, explain the provisioning requirements applicable to this NBFC and comment on the provision for NPA made by the company. So in fact, you need to comment on the NBFC provisioning. Yes, over to you. What do you think? Do you agree with the provision which they have computed?
I think so. Some provision was what we remember was required for standard assets also, no, sir?
Right. So clearly that is evident. Okay. Now in the question, there are 2 ways to deal with this. Either you can say that provisioning for standard asset is not correct.
And the
But
last
what does the question require? Question requires you to answer if this nil is incorrect, then what is the correct answer? So how do you give that? So that is where you need the provision. Huh? Okay.
You have to learn. You have to learn that.
Correct.
Sir,
correct.
one thing is very sure. Last said that 100%, they provided for 100%.
Yes. So I think this will be very, very simple. Okay. And that's why the question has also not changed this. Can you understand? See, examiner is also smart because they understand what is it that you are going to cover and what is it that you are not going to cover. Isn't it? Okay. So loss asset, it's good. So there is no problem on this.
We have covered the 2 extremes, sir.
Sorry?
We have covered the 2 extremes, sir. Standard and the loss.
Correct.
Sir,
We have covered
sir,
these 2.
Yeah, on the substandard, I think if the middle level and above, they need to consider 0.20.
Okay.
And the upper level and above, it's 0.40 non-standard, substandard asset need to provide the provision. We need to look at what is this investment, the NBFC categories. First, we need to determine.
Right.
Based on that, we need to allocate the substandard as well. I think
Okay.
for substandard, it is I think 40%, doubtful will be 60%, I believe. That's what we.
Okay, and what about this doubtful one?
Doubtful 60%.
60. Okay. That's too high, but it's
I think
you can also track it through the aging, huh?
40%. It's
60, I think, was the uppermost category. Remember? Okay,
yes,
but
sir.
I think to begin with, every time, what do you need to find out? Percentages which will apply to this particular category. Okay,
Yeah.
so it's the systemically important non-deposit taking NBFC.
Which means the level.
Okay, which is again a category. Okay, how do you categorize? So these are the RBI requirements. So we don't need to get into that detail as to how that is categorized. We just need to find out that the percentages will be based on this category. Okay, so let's understand this. So what are the percentages that you have for this type of NBFC? For standard assets, it should be 0.4%. Substandard, 10. Doubtful 1 to 3 years, 30. Loss assets, I think you already answered that. So if you apply these percentages, what will happen? This one is okay. Okay. This one we discussed is okay. These 2 are problems. So what should be the correct amount? Sorry, these 2 are problems. So what should be the correct amount? For standard, it should be 80. For doubtful, it should be 2.4. Yeah. So this is the change. Or you can say this is the shortage which you have. Clear?
Yes, sir.
Right? So from the above, it can be concluded that provisioning for substandard and loss assets is in accordance with the RBI prudential norms, whereas for standard and doubtful, it's not correct. So that's why if you look at their auditor, his opinion was correct, that the opinion has not been done correctly. So you need to give the conclusions also. So please remember, in the exam, you need to give the conclusions. Okay, next one. Sugam Housing Finance Limited is in the business of housing finance activities having asset size of 800 crores. Its principal business is of providing finances for housing mainly to individuals. It is not identified by the RBI in upper layer. Now there you go again. So they have used some wording, upper layer, lower layer. Remember, at top layer, middle layer, base layer. Yeah. Now, under scale-based regulations introduced by RBI, what should be the appropriate classification for such a company? That's one. Okay, so that's your question number one. So first of all, you need to comment on the scale under which it will fall. Is there any specific reporting requirement under CARO for statutory auditor of a company engaged in a housing finance activity? So that is your part B. So this is part A, this is part B. So let's talk about part A.
I think Housing Finance Limited is not part of the NBFC. It's not registered under the NBFC, I believe. There is a.
So in terms of layering, you need to talk about it. So one is to obtain the registration or not. So I remember that was one of the aspects we discussed. In terms of layering, under which layer you take it? Tell me. All right, so let's look at this. Okay.
CARO compliance we have to.
Okay, yes. What about CARO? Tell me, what about CARO? Please go ahead.
That is registering, whether the company is required to be registered and the registration certificate has been obtained, like that. Statutory provisions have to be.
Okay, so let's look at this. See this set. Yes. I think you want to mention something. Yes, please pick up.
What are the steps for recovery? Aggregate amount,
Right.
promoters, prejudicial interest to the company.
In terms of the loan given, you're saying, huh?
Yes. And the registration requirement for the as a housing finance company.
Okay.
Overdue size amount.
Right.
So
I
these
think
were
some of the points that we just discussed. Is it?
that is all what I would say.
No worries, no worries. Okay, so let's find out. Yeah. See, the said company is not identified in upper layer by RBI. Under scale-based regulations, NBFCs undertaking housing finance activities constitute middle layer. Where do you get to see this from? I think the norms you'll have to look at. Asset size will not be relevant in those cases. All housing finance companies not identified in upper layer would constitute middle layer due to nature of their activities. Now, as regards CARO, there is a specific reporting requirement under CARO, which requires auditor to report whether the company has conducted any non-banking financial or housing finance activities without a valid certificate of registration. Okay, clear? Next, Abhimanyu Finance Limited is a NBFC and was in the business of accepting public deposits. Okay, so it was in the business of accepting public deposits, giving loans since 2015. So it seems to be a old company. company had net on funds of 1.5 crore and was not having certificate of registration from RBI and applied for it on 30th March 2024. Okay. Company appointed Mr. Kabra as its statutory auditor for the financial year 23-24. Advised the auditor with reference to audit procedures to be taken and reporting requirements on the same under Kabra. Over to you. Over to you.
So there is a violation norms that company has been in the business of public deposit and giving loans since 15 without having a registration certificate.
Okay, so why do you think there's a violation? Because the company has already applied. So it says company has already applied. So even if you say it's a violation,
30th March, sir, 2024.
Yeah, so that's correct. But we are looking at the financial year 23-24. Okay, so before the end of the before the end of the financial year, company has applied for the registration. Okay, so it's in process.
But has not received it.
Sir, actually, when the company is accepting the public deposit, the minimum own fund should be 2 crore.
Okay.
So in this case, 1.5 crore only is there.
Right.
So it has to be reported under CARO.
Okay. So what do you report under CARO? That the company doesn't have net on funds, or
Yes, sir.
the company has not obtained the registration certificate? What do you report?
Yeah, which is less than the prescribed limit of 2 crore, and also the registration certificate is not received.
Right.
This matter I will report into the CARO.
Okay, so you'll report both the things, huh? But what about this company moving on to obtaining this certificate? So how do you deal with that? So do you also specify that somewhere in the report? Because otherwise it will appear to be a negative comment.
In the report I can mention this registration is processed. They applied on this date also. I will mention in that.
Right.
The date also mentioned, and also mentioned is less than 2 crore.
Right.
This matter we will include in the CARO, sir.
Okay. Okay. Anyone else? Any more thoughts if you have on this? All right. So let's look at this. Yes, please go ahead.
Sir, whenever the limit achieved, they can go for registration.
Right.
Here it is only 1 crore 50 lakhs. Below the limit of statutory limit of 2 crore.
Right.
So it's
what
not
does it mean?
They can take the registration after that only.
Okay, so what is your point? As an auditor, how will you deal with this?
She's probably saying that they were not required to get registration.
Okay. All right, so let's look at this. No worries, let's look at this. So if you look at the requirements of CARO, auditor is required to report whether the company is required to be registered or not, and if so, whether the registration has been obtained. So this is what CARO requires. Auditor is required to examine whether the company is engaged in the business which attracts the requirements of the registration. Okay. Now, registration is required where the financing activity is a principal business of the company. Right? RBI restricts companies from carrying on the business of NBFC without obtaining certificate of registration. Yeah, so it's a complete process. In this case, what are the audit procedures and what are the reporting requirements? Auditor should examine the transactions with relation to activities covered Financial statement should be examined to ascertain the company's financial assets. Remember that 50-50 test. Okay, so that should be performed. Okay. Whether the company has net on funds as required, whether the company has obtained certificate of registration, auditor should report incorporating the following about all of these things about the registration. Okay. Now, in the given case, Abhimanyu Finance Limited is an NBFC and was in the business of accepting public deposits. This has been going on since 2015. Company was having net on funds of 1.5 crore, which is less in comparison to the prescribed limit of 2 crore, and was also not having registration certificate from RBI. So therefore, in this case, auditor is required to report on the same under CAR. Why? Because at one place, company has been doing the business of NBFC. So as far as this test is concerned, this is met. Yeah. So the company will pass this test. They will be considered as an NBFC. In fact, the question also clarifies they are an NBFC. The moment it's an NBFC, what would the company need? Company would need to bring this net on fund to 2 crore. So if they do not have 2 crore, that doesn't mean that they can't register. They will have to bring this limit. Okay, for an NBFC or for a company to do the business of NBFC, what do they need? Net on funds. Number one, certificate of the registration. So to say that their net on funds were not adequate, and that's why they will not be able to obtain the registration. If you say that, then the company should not be doing the business of NBFC. Okay, so company can't give this argument. Clear on this? Yeah?
Yes, sir.
Next, let's look at this. Singh Limited is a company registered under Companies Act. So it's a company. Yeah? It's engaged in the business of loans, advances, acquisition of shares, stocks, bonds, debentures, securities issued by government or local. So for the year 31st March 24, we have this extract of financial statements available. So paid up capital, non-current assets, current loans, advances. Both of them are about loans, advances. Then you also have the total assets, intangible assets. Profit is given, income from interest and dividend is given, gross income is given. Directors intend to apply for registration as NBFC. Please advise. Over to you. So if the directors plan to apply for registration, what is your advice on this? Once again, the data is given. So that's why, please remember, somewhere you need to apply this. Over to you.
We'll check whether financial assets are more than 50% of the total assets.
Okay, so you can check that and let me know. So do you have the financial assets more than 50%? Tell me. So what are the financial assets? That's the first point.
Sir, I need total intangible asset. I need to minus it. 620 minus 12 crore.
Right.
Then I can see the total asset. Then income generated. That the gross income is 118.75
No, let's
crore.
go one by one. Huh? Let's talk about the first point. Financial assets.
Financial assets. Yes, sir.
Are those in excess of 50% or not? Because otherwise, why do you get into financial income? If you do not have financial assets more than 50%, do you need to check the financial income criteria? No, because both the tests have to be passed.
Yes, sir. If I add that financial income, it comes.
No, again, you are talking about financial income. I am talking about financial assets. So do we have financial assets more than 50% or not?
Yes, sir. We have the financial assets more than.
So what
yes,
are the
sir,
financial
correct.
assets? Can you tell me?
Finance asset is 61.75.
These two.
Yeah. Then
Correct?
312.25. If you put together, it is 374 crore. It's coming.
Correct. Okay. So that's more than 50%. Okay.
Yeah.
So the
Then
first
it.
criteria is met.
Yes, sir.
Okay. What about the second criteria? It says financial income from the financial assets
It's 68
should
crores.
be more than 50% in terms of the gross income that you have. So is that criteria also met? Is that in excess of 50%? So what is the
No,
financial
sir.
income?
No, sir.
What is the financial income? Can you tell me?
Income from interest and dividend.
Right.
It's only 68 crore is there.
68 crore. Can we say it's in excess of 50%?
No, sir.
No,
Why?
it's a gross income.
It will be more than 50%.
Right. So if you look at the numbers, okay. So now what is your income from financial assets? 68 crore. What is your gross income? 118 crore. So definitely it constitutes more than 50%. There's no doubt about it. Yes or no? Yeah. So the financial assets constitute more than 50%. Income from financial assets constitute more than 50%. Therefore, it is in the business of NBFC. Therefore, company will have to apply for registration under this
Sir, in this
particular
case,
section.
sir, gross income is 118.75 crore. The financial asset, that the income is only 68 crore. How come
Right.
68 crore is more than gross income, sir?
No, it's not more than gross income. We are not saying it's more than gross income. Are you
Okay.
computing the financial asset as more than total assets? So when you computed more than 50%, what does it mean? It means it should be 50% or more of the total assets. Yeah, so if you compute this, 68 divided by 118.75, what percentage do you get? Can you tell me? Compute this
57.
number. Sorry?
57%.
57%. Is that in
57%.
excess of 50% or not?
Yes, sir.
That's how you compute this.
There
Okay.
was a 50-50 test. 50-50.
Yes, correct. And
Sir,
I think the same test you performed on financial assets also. Otherwise, how could you get the financial assets more than 50%?
yes, sir, I
Is
completed
this
wrongly.
total more than 620 crore? Answer is no. Okay, so I think somewhere you got confused. Clear on this now?
Yes, sir, I confused on that 68 crore. If I multiplied into 2, it will come 136.
So it's
I put
good
it
that you
wrongly.
got confused. No, it's good that you got confused today because now you will remember in the exam. Huh?
Yeah.
Okay,
Whenever
very
you,
good.
whenever you give a wrong answer and then you get corrected, you always remember that, sir.
Yes, very good. Yeah, so that's why it's important that you answer everything. Huh? Whether it's incorrect or correct doesn't matter. Okay, so I think with this we are through for both these. And over to you, Tana ma'am. And thanks everyone for your time and for this wonderful participation.
Thank you very much, sir. Thank you very much.
Thank you.
Good morning, everyone. This is C.A. Tanya Gupta from Board of Studies. I must say thank you so much, Achal sir. The session was really very interactive. You know, really covered all the important topics in the class with all the important questions, I must say. Even I myself was enjoying the session throughout. And the session was really very interactive. Everyone was asking questions, and I just saw how you cleared the doubts of everyone. Let me first ask you, student, can you tell me you are going to attempt September exam or November exam?
September exam, ma'am, myself.
Okay.
September.
Okay. So this is your second class where you covered auditing on banking and NBFC. Total there will be 15 classes of LVRC conducted by BUS for September 2025 examination. Next class is on 19th June. That will be on professional ethics, and the topic is really, really very important. So I think you all are aware of the weightage, topic-wise weightage and skill-wise weightage. Let me once take you through. So the whole syllabus is divided into 19 chapters, and 19 chapters are further divided into 5 sections. Section number 1, which covers chapter number 1 to chapter 11, it carries 45 to 55% of your marks. That is 52 to 62 marks are being asked in the examination from this topic. It covers all the engagement and quality control standards that will be covering later in our LVRC lectures. Then there is section number 2, chapter number 12, digital auditing and assurance, which is of 3% to 6%. That is 4 to 6 marks are expected from this topic. Then we have miscellaneous topics, which are from chapter number 13 to chapter number 17, group audit, banking, due diligence investigation. Then we have internal audit, PSU. This topic is also covers very good weightage, 17% to 24%. That is minimum 20 marks are being asked from this topic, and 27 is the maximum marks which we ask in the examination. Then we have chapter number 18, ESG, SDG, and it is of again 4 to 6 marks, and very, very important topic, professional ethics and liabilities of auditor, which is of 20 to 27 marks. And in next class, we will be covering that. Further, students, we Board of Studies have come with the free open session queries for you, where you can ask your queries, where we will be clarify you subject related queries, journal doubts, or any academic support you want on how to clear your examination, boost your preparations. So this will be weekly. We will be conducting weekly open house queries. Timing will be 4 to 5 p.m. and every week on Monday, we will be having FR. On Tuesday, it will be AFM. On Wednesday, that is tomorrow, 18th June, it will be auditing, assurance and PE. Then on 19th, DT and international taxation, and 20th, IDT. It will remain throughout the session, every time till the wind up. So you can ask your queries. You can join anytime through Zoom, and you can get this schedule from BUS Knowledge Portal also. So if you have any other query, you can ask through BUS, ask your query feature, or you can call us also on 0120 3045 925. So if you have any doubt, you can ask. Otherwise, we are going to wind up this session.
Ma'am, I have one question not related to auditing. That the IBS, the Integrated Business Solution, when I am looking into the study module, it's only updated up to 2023, October and September. The set A, set B, I am talking about. Set A, set B, only.
Okay, so I'm not a concerned person for the same.
Yeah, since open query is not available IBC, to whom I need to connect with that?
No, I think every Friday there are IBS sessions on BUS Knowledge Portal only. You can join them.
Okay, ma'am. Okay.
Every Friday in evening, 6 to 9 p.m. There is IBS sessions.
Okay, ma'am.
There will be an open session today on AFM?
Yes, on AFM, 4 p.m. to 5 p.m. 4 to 5 in the evening. You can join.
Yes.
Yeah. Okay. Thank you everyone. Thank you, Achal sir.
Thank you, ma'am.
Thank you for your participation. Thank you, everyone.
Thank you so much. Thank you so much, sir. Achal sir.
Thank you. Yes.